but nevertheless, this area here I think is going to provide some support for the market in the longer term, which means if the market can hold there, let me get some of that junk off of there. If the market can hold that area, then I really do think we're in store for the market to just continue this move, this action that it's been on really since 2006. And you can see that would be here and then coming down like this. We also had a question about harmonics. Now I'll give you one of the ways that I use that particular tool is I'll run this line down here. Okay, so actually I'll just go ahead and run it to the bottom. Okay, so you can see that the retracement here was 598 pips. Okay, so, and I just took one of the retracements in there. Now what I'm going to do is lay that over here. Now you can see that this actually went a little bit farther, and that's actually just about 1.272 extension. You can see here that was very, very close. So this retracement here is ultimately the same as this retracement there. Now we'll move this up here. You can see this one fell short just a little bit. So this one, now I use these harmonics in terms of planning. Okay, so let me go ahead and I'll run the Fibonacci retracement. Whoops, wrong direction. Pardon me while I redraw here. Okay. So now this Fibonacci retracement is going to measure this 598 pip move. Okay. So what this is saying is right now the market has made a 618 retracement of a harmonic. Here's the 786 retracement of the harmonic. So if the market is going to use this 598 pip move as a harmonic, I would expect it to retrace here or go to the full amount, which would be 99.97 roughly. Let me go over that again. All I'm doing is I'm taking a prior move in the market, for example this one here. I'll measure the distance from the top to the bottom, and then I'll use that distance as a gauge for other moves in the marketplace. Okay, this move was about the same as this one. Okay, so there is a symmetry or a harmony or a harmonic in the market. This move was about 61.8. This move so far has been about 61.8. So again, right into this area that you can see there's a lot of overlap. Right in this area there's support based on the way the market has moved and also based on the way past moves have gone for the pound. So one last check here. We'll go ahead and go back to the weekly bars. And you can see that this week is challenging the low of the prior week. So this is going to be an important area for, I think, a couple of reasons. Of course, this week stalled out right on the highs from last week, right on time. So we've had some pretty good setups here. I think in retrospect, in looking at the way the market was trading, I was probably being a touch too conservative. But again, with people who are watching these videos and potentially taking trades on their own, I tend to err on the side of caution, or on the side of not caution but conservative, which, looking at last week and the market putting in highs over here, it might have been a prudent move to take a trade, a low risk move at least, to take a trade over here. That's one of the things that's going to be going down into my journal for this particular week. And that's something that you should also, this is the type of thing that you should be putting into your journal as well, because those are the types of things, the types of trading decisions that you want to track over time to make sure that it's not affecting your outcome or your profitability in a negative way.